Tax season is upon us, and you've probably heard of provisional tax. Well, tonight I'll find out for you how it affects you or a family member maybe that's overseas currently as an expat, maybe sending money home. And to answer these questions, I have Reabetswe Moloi, tax attorney at Tax Consulting SA on the line this evening. So good evening to you and welcome to the Business Hour.
Hi, thanks, Cyril. Thank you for having me. And hello to all your listeners, and thank you for tuning in.
So tell us a little bit, Reabetswe, help us understand what exactly is provisional tax and how is it different from income tax?
Yeah, okay, perfect. So, people just generally have this misconception that provisional tax is some form of a different tax that needs to be paid. But that isn't the case because provisional tax isn't a separate tax from income tax. However, what provisional tax actually is, it's merely a method of paying one's income tax in advance to ensure that basically the taxpayer is not met with a large tax liability upon assessment.
So who must pay provisional tax? How does it work?
Yeah, so that's a very important question. So insofar as natural persons are concerned, so you and I, living and breathing people, it would be any person who earns any income other than a salary. So if, for example, you are only earning rental income, you would be regarded a provisional taxpayer. Or if you're earning rental income over and above your salary, then you would be regarded a provisional taxpayer. This, of course, is the general rule. So it doesn't necessarily apply to all South African taxpayers. And this is because you get South African tax residents who are working abroad and are only receiving a salary, and then they will be regarded provisional taxpayers. And this is if their employers are not registered to withhold employees' tax. And of course, that would be the situation for most expatriates.
So how does that work then? If let's say they come back, let's say they don't send the money back, they save up and save up and save up, and one day they do come back to South Africa with a lot of money. Is there a big tax amount on that needs to be paid? Is that also provisional tax, or is that something else?
I mean, are you now referring to the income that they're receiving and
yes.
they're not submitting any returns?
For the expatriates, yeah. For instance, if they're working at a place that's not registered.
Yeah, so I mean that would be the case for those particular expatriates because of the fact that their employees aren't registered for pay as you earn, so there is no tax being withheld in respect of their salaries. So they are required to be provisional taxpayers and submit a provisional tax return.
All right. Okay. Talking to Reabetswe Moloi, tax attorney at Tax Consulting South Africa about provisional tax. And also another thing that I would like to know from you tonight, what are some of the benefits? I mean, there's got to be some benefits of provisional tax.
Yeah, that's a great question because, some people believe that, being a provisional taxpayer is this massive burden. However, in my opinion, it's all about perspective. And you have to look at what the purpose of being a provisional taxpayer is all about. And it's basically to ensure that you as a taxpayer, you're paying your income and your income tax liability in two separate payments. And therefore, upon assessment, you aren't met with this huge tax liability. So you aren't given a shock because you basically made your half payments in the one half of the year and the next half at the end of the tax season. So what happens, the second most important benefit of being a provisional taxpayer is that it encourages tax planning as well as saving. So, you plan ahead for your provisional return, and in turn of that, because you've been planning, you're able to save because you have an idea as to, what your tax liability would be upon assessment.
So tell me another thing, the period in which we can pay the provisional tax, what is that specific period? As far as I know, I think it's due 31 August. And then also another thing, penalties. What should we know? I mean, if we don't pay in time. Yeah,
definitely. So the first provisional tax payment is to be made within the first 6 months of the year, so by the end of August, and then the second payment would be due at the end of February. So, of course, as a provisional taxpayer, you need to make sure that firstly you are submitting a provisional tax return and you are paying any provisional payments on time. And so what's important to note is that failing to file would result in SARS raising interest or penalties at the time of their income tax assessment.
So what are the different methods that the guys can use to pay?
Yeah. So you have your EFT transfer, which is, most commonly used method of payment by taxpayers because most people are very familiar with it. And it's just a matter of making EFT payments to SARS using their banking details. And these would be reflected on their provisional statements. And the provisional statements would only be available to them once they've actually submitted their provisional tax return. The second one, which isn't so commonly used, is the credit push, called credit push on e-filing. And basically, this is just a matter of you loading a payment on e-filing. And it's like it's a button that you select on e-filing to make a payment, and then it loads the payment onto your bank account. And then the payment, once the payment has been loaded, you would then have to release that particular payment by logging into your banking app and then releasing the particular payment.
And also one last thing, Reabetswe, before we say goodbye. Due to COVID-19, are your offices open?
Yes, our offices are fully operational and functional. We work remotely, especially because we deal with expatriates quite a lot. Our business is working remotely anyway, so we are full up and running.
Wonderful. Reabetswe Moloi, tax attorney at Tax Consulting SA.